Today I will discuss treatment of closing stock in balance sheet. You have gone for interview for the post of senior accountant, accounts manager, etc., etc. The interviewer has presented, has asked you the profit and loss account you are seeing here, that net loss is coming 3 lakhs. The dealer is the trading business of two-wheeler vehicle. He is a trading business. Opening stock 1 number, that is 2 lakhs. Purchase 5 numbers, 10 lakhs. Sales 4 numbers, 9 lakhs. Loss 3 lakhs. They can ask you whether the profit and loss account gives a true and correct picture. What will be your answer? Your answer will be, some typical accountant will say, no, debit and credit has been tallied, so this is correct answer. But you must apply your common sense, logic. What logic says? Cost price of the per vehicle is 2 lakhs. Sale price of the per vehicle is 2 lakhs 25,000. So what is the profit per vehicle? 25,000. So how much profit will come? 4 into 25 lakhs. That is 1 lakh profit will come. This is common sense sales. They can ask you why. What is the item that has been missing here? So you have to say that its closing stock has not been considered here. Now, after considering closing stock how much? 2 numbers vehicle is the closing stock. Opening stock 1 plus 5 purchase 6 minus 4. 2 numbers closing stock. Cost price is 2 lakhs. So 4 lakhs is the closing stock. After incorporating the closing stock, the profit has come 1 lakh rupees. What I have been telling that if you apply your common sense, 4 vehicles, that is per vehicle profit is 25,000, 4 into 25,000 is equal to 1 lakh rupees. Now this is the correct thing. Interviewer can ask, is this also correct? Arithmetically it is correct. But one thing you must know, that profit and loss account only consider the cost of goods sold, not purchase of vehicle. How to determine the cost of goods sold? I am showing you, because cost of goods sold, nowadays accounting principle is that no sales, no purchase, no closing stock, no opening stock should be shown. It must be shown the cost of goods sold. That they can ask you how cost of goods sold is determined. As I told earlier, that cost of goods sold, how it is determined. You see opening stock how much? 2 lakhs. This debit. Purchase 10 lakhs debit. Total debit 12 lakhs. Closing stocks 4 lakhs credit. Cost of goods sold how much? 12 lakhs total debit minus 4 lakhs total credit is 8 lakhs. As I have told, as I told you earlier, that is per vehicle, that profit is coming 25,000 each. So how much profit is coming per vehicle? 4 into 25,000 equal to 1,000. Now, nowadays all the companies as per accounting principles are showing the cost of goods sold in case of trading company and cost of material consumed in the case of manufacturing company. Here it is a trading company, so I have written cost of goods sold. But in profit and loss account, you have to represent the item cost of goods sold debit 8 lakhs, sell 4 vehicles we have sold. As I explained earlier, 4 vehicles we have sold, 4 into 2 lakhs 25,000 per vehicle each, 9 lakhs. 9 lakhs minus 8 lakhs is equal to 1 lakh profit. Now there is no doubt that profit is coming 1 lakh rupees. This is the formula for determining the cost of goods sold. Opening stock purchase debit less closing stock credit. Cost of goods sold will go to the only one figure will go to the profit and loss account. Cost of goods sold debit 8 lakhs, sales 9 lakhs credit. Now I have clarified, but this is the arithmetical answer. Accountancy will not believe that arithmetical answer. They can believe only debit and credit equation. In addition to that point, one thing I am telling, another question may be asked that why closing stock is not coming into the trial balance. Because after preparing the final trial balance, closing stock is being counted. You have seen in most of the companies, they have a system to have a physical verification at the end of the year so that they can value the closing stock. Now, what will be the accounting equations of closing entries? What will be the debit closing stock? What will be the debit and what will be the credit? Now I am explaining to you. Now journal entries has to be passed to close our discussion. What will be the journal entries? Journal entries will be like that. Debit closing stock 4 crore, 4 lakhs. That should come under the asset side of the balance sheet under the heading of current assets. That was written there, balance sheet current assets. Another entry will be passed is credit profit and loss account, because profit and loss account, in profit and loss account will be credited that 4 lakhs rupees. Now that is profit and you have shown that is in the profit and loss account we have discussed that is only the cost of goods sold is being considered. That is the cost of goods sold, that is not value of unsold stock. Closing stock is the value of unsold stock. Now today I am closing my this chapter. If you like, you can comment, you can share. Now all the best to all of you.